Good afternoon, everyone. We're going to give it a couple of seconds while everyone comes in. Good afternoon to you, Mike.
Good afternoon. Nice to see you.
Good to see you as well. Hopefully everyone is ready for part 2 of the series. I am super excited. There was so much information last week, but the way you break it down was really, really informative. So
Great.
I'm looking forward to today.
Glad to hear it.
Let's see. Let me go ahead and share my screen and do a quick intro. Mike, are you able to see that okay?
We're good. Go for it.
Okay, perfect. So good afternoon, everyone. My name is Lauren Simpson, and I'm with the SBDC, or the Small Business Development Center. We are a national program with over 1,000 locations across the country, and we offer no-cost services to local small businesses. And they're at no cost to you because your tax dollars have already taken care of our fees. For the Los Angeles network, which is the network that I represent, we have locations throughout the Los Angeles, Santa Barbara, and Ventura counties. So if you are anywhere within those counties, please be sure to reach out to one of our local offices. And I'll tell you why you should do that. I mentioned those no-cost services. Well, that includes business advising. And so you're able to meet one-on-one with one of our business experts, someone like Mike DiDonato or other experts in the fields of marketing, as well as business planning, Mike, licensing and permitting, Mike, taxes, you name it, we've got resources for you. And then we also offer virtual trainings, much like the training you have joined today. So again, we are here to help. Contact us today to get started. You can reach us by phone, 866-588-7232, or go online, smallbizla.org/new client, or you can go to americassbdc.org/find-your-SBDC. I'm gonna quickly stop my screen share and do quick housekeeping. Please be sure to put all questions into the Q&A and make sure your questions are on topic, please. And then we'll reserve the chat for any links or any commentary you would like to have amongst each other. With that, I will kick it over to Mike.
Thank you so much. So I have a couple of things to talk about before we delve into the metaverse, NFTs, and that type of stuff. By the way, GB, apparently he's running later, might not be able to make it. So first of all, I read an article earlier today, actually yesterday, that there's a bill in Congress to increase funding for the IRS by $80 billion. That's like 5 times their current budget. And that is for enforcement, not to improve customer service. Specifically, Congress wants to go after those who have pass-through tax entities, such as LLCs and owners of subchapter S corporations. They have trouble winning in court against earners that have, let's say, in the top 1%, over $500,000 a year income. They actually lose oftentimes because those folks have lots and lots of money to protect themselves. And I see GB's coming on. He can talk about this a little bit more too. So the bill going through Congress is specifically targeted to middle-class owners of businesses who have pass-through entities. And in particular, owners of subchapter S corporations, because they're supposed to take a reasonable salary. GB, can you turn on your video? He might be working on it. So I want you to be aware that that bill has not passed, but it may likely pass. So if you are an owner with a pass-through entity like a partnership, sub-S corporation, or an LLC that elects sub-S tax treatment, as a partnership can too, be careful about how you justify your expenses and how you justify your payroll, because the IRS is coming for you and all of us. I don't know if GB, can you unmute yourself?
Howdy.
Did you hear what I had to say, GB, about that?
I did not. So I had a rough couple of days. I just came back from Tennessee after having all these weather issues. So I just
Oh.
landed a few minutes ago. So I'm getting my bearings straight. What were you talking about, sir?
Oh, thanks for joining us. Earlier in the week, I
Absolutely.
sent you a article about bill going to Congress that's
Mhm.
going to fund the IRS by an additional $80 billion.
Correct. Correct.
Talk about that. You read that article?
I did. And actually, I wanted to bring something along those lines with the ERTC. So right now, there are a lot of consultants out there, especially from many of the payroll companies and even non-payroll companies, companies that have nothing to do with accounting. They have gotten into the employee retention tax credit business, and they have promised a lot of people that they qualify for ERTC. And in some cases they do, in many cases they do not. But either way, one of the biggest things they have suggested to a lot of clients is like, listen, get this ERTC, get this money in your pocket, and you don't have to amend your 2020 return. You don't have to change your 2021 return. You can just claim it on this year's tax return when you do it next year. What the IRS has given us guidance on Monday is this. That is wrong. And you're right, they're getting money, so they will be coming after these erroneous, in some cases, what they deem to be fraudulent returns. And not only are the taxpayers at risk, tax preparers are at risk as well. Because I've had a couple of clients get upset that, GB, I can have somebody else do it for me. Long story short, what the IRS has ruled, or what they have given the guidance, because they haven't ruled yet, they haven't audited these returns yet. What they have ruled is that is wrong. If you are claiming an ERTC based on 2020 wages and or 2021 wages, and you've already filed your return, you have to file an amendment. However, they have given an informal instruction guidance to their employees that has been leaked, which basically said, if the net effect on the tax bill is negligible or zero, then don't worry about it. Let them slide. But then you are at the mercy of an IRS auditor. And remember, not all audits are happening in person. They may just send you a letter saying, we want all of these records that you claimed ERTC 6 months ago or 6 weeks ago. We want all of these documents to support your claim. And if your documents don't support the claim, you will get a notice with taxes due, penalty, and interest. So what do I mean by negligible? Let's say you took ERTC for 2021, and let's say you've already done your tax return, maybe in March, maybe in April, May, June, or July, and you receive your ERTC check in August or September, and you are told by your preparer, don't worry about it, we'll take care of it this year. It doesn't work out that way. But let's say you were supposed to reduce your taxable wage deduction by the ERTC amount, but doing so keeps you in the same tax bracket on your personal tax return. If that is the case, IRS auditor at their discretion may let you slide because, hey, you would have owed additional $2,000 in taxes for 2021, you owe extra $2,000 this year, fine, whatever, we'll let it slide. But if that adjustment would have pushed you in a higher tax bracket, well, guess what? Now we're talking something else, because maybe you went from 12% tax bracket to maybe 21 or 22% tax bracket. Well, that's a big difference. So be mindful. The proper thing to do is to amend the tax return for 2020 and or to refile or amend the 2021 if you've already filed the tax return. But if you don't do so, run a thorough analysis with your accountant that what is the net effect on your tax bill. And this is especially true for partnerships, because it may have one impact, or even LLC tax as an S corp with multiple shareholders. You may be in one tax bracket, your partner may be in a different tax bracket. So this is why you want to have an open communication with your partner, with your fellow shareholder in the S corp, to say, all right, what is the net effect? And do we need to file an amendment and have new K1s issued or not? It will not affect your W-2. It will affect your K1, whether it's from a partnership or an S corp.
If this sounds confusing, talk to a tax professional who's very familiar with these topics, because it's confusing.
It is, and it will affect your tax return differently for California versus IRS. So you do want to, and if you do your own tax return, you may want to hire somebody on an hourly basis or a project basis to figure out if it's feasible or not. And just
And
be
don't
careful.
count on the IRS giving you answers.
No,
Only 10% of calls were answered by the IRS last year, and they
yes,
are not increasing funding for customer service. They're increasing funding for enforcement.
correct.
That's it.
Correct, especially ERTC and PPP enforcement, because that's where the big money is. And it used to be big money for the big guys. Now, I mean, many small business owners who had payroll of 40 grand per employee, they had maybe 3 employees, they may have received $60,000 in tax credits. Well, guess what? Your small potatoes just became a big baked potato, and IRS may come and ask you a few questions, because if you didn't properly account for that 60 grand, that can easily be tax bill and penalties, a 20 grand payday, and any IRS auditor will salivate on that. So the idea is this: I'm not discouraging you from going into and claiming ERTC. You should. It's a low-hanging fruit. It's a lot of money. You should get it. But once you get that money, make sure you properly account for it on your tax return and your bookkeeping, so that if somebody comes knocking on your door or sends you a notice, you can simply copy and paste and print, send them the documents, and get out of the crosshairs of an audit. It's an easy fix, but if you won't do it, you'll be in a heap of trouble, because easy come, easy go.
Thanks, GB. So we're going to move into the second part of the presentation I started last week. We'll do a quick recap. We're going to be focusing on blockchain. So this is the Metaverse Crypto NFT Blockchain Crash Course. I'm sure all of you have heard of one of these terms, and you're wondering, what the hell does this all mean, and why does it matter to me? It matters to all of us. Millions and millions of people are involved in this. Billions and billions of dollars, which will go to trillions of dollars soon, is involved in this. You need to understand it, even if you're not actually involved in it. And there's ways for you to make your business better by understanding it and possibly taking advantage of it. So there's not one metaverse, there's multiple metaverses. Here you see some scenes from Roblox and Facebook and Fortnite and Decentralized, and there's a whole bunch of metaverses out there. Ask a 12-year-old, they'll take you to their metaverses. Go to Roblox, go to Minecraft. If you're already involved in those gaming universes, then you know what we're talking about here. It's a computer-generated universe. And here's another scene from one of the games. Millions of gamers. You want to reach your customers where they're at. You're not, this generation, the generation that, 12, 15, 20, 35, etc. They're gaming. And that's how you meet your customers. Okay? So here, go ahead, GP.
At the very least, I tell my clients it's basic marketing, product placement, or a banner ad. I mean, many of us grew up on public TV, and then we went to cable, then we went to social media, and then all the Netflix. I mean, at the basic stuff, at the very, very basic stuff, if your clients, as you said, these youngins, they're spending time in these platforms, even a basic product placement or somebody mentioning you, that's marketing 101. So you may think like, oh my God, I don't understand it. Product placement, marketing, banner ads, some of us remember, it just recycles.
Awesome. Great advice. If you don't understand it, find somebody who does. Okay? Lots of people get this, and they're of a younger generation. Okay? And here's some of the metaverse. It's not one metaverse, by the way. That's a little confusing. Okay? They call it the metaverse, but it's not. There's multiple metaverses. So you have Roblox, Fortnite, Sandbox, and on and on and on and on. And in these metaverses, you can buy land, you can buy businesses, you can sell GB, you can sell products, you can do all sorts of things. Now there are lots and lots of brands, including financial services, that are involved. I believe, GB, I've actually seen accounting practices set up in some of these metaverses, because that's where they want to reach customers.
Absolutely. a lot of these tech companies, they're spending their time here. They're not, their employees and their founders are spending their time here, not on traditional media.
Right. So if you're from a different generation, you grew up with TV, et cetera, and that's where people found you. Now they're going to find you, they're going to find the population in these metaverses.
May I share a fun fact?
Yeah, sure.
Most people may or may not know this. I mean, we all know soap operas. They're called soap operas because they were a TV opera that was usually sponsored by a soap company, Tide or whatever, hence the name soap operas.
Yeah.
So all this stuff is just a different mechanism. It's the same old stuff.
You may say, no, I don't want a game. I mean, I have no interest in doing any game. I have no interest in being in these worlds. That's okay. You don't need the game. But if you want to reach an audience, particular audience, then you should be in that metaverse. But it doesn't mean you have to game, right, GB? You can just buy and sell properties and promote your product.
You're right.
Yeah. So I'm not saying get sucked into these games, by the way. Facebook is now Meta for a reason. There's an hour-long video that explains this. Mark Zuckerberg wants us all to meet in a metaverse that they're creating. And they're spending, I don't know, millions and millions of dollars creating it. They haven't done it yet, by the way. Okay. And they bought Oculus, which is a VR headset, you put on your eyes and virtual reality for a reason. Mark Zuckerberg knows where his customers are going to be. They're going to be in these metaverses, and he's creating his own.
I have a client who's only about 21, and he recently sold a company to one of these big builders. He's only 21 and within a year, he built a company and sold it to them for $400 million.
Oh my God. Good for him.
Yeah. So the thing is, this is what I tell my clients, I don't have that technical know-how, but can I partner with somebody? And even if I make 50 million, hey, it's money. So
you're good.
You're absolutely right, Mike. You don't have to do this. You don't have to understand it. You can monetize it should you want to. I'm sure you're not telling them you have to do this, but
well, don't have to do it.
There's big money here.
But if you want to grow your business, there's a way to do it.
To make $400 million in a year, it's not bad.
Yeah. So that's the technology part of it, right? He's selling the technology to help these metaverses grow, essentially, right? Or to access the metaverse.
Exactly. It's just like Apple. They didn't develop Siri. They bought Siri functionality from somebody. They didn't develop Siri. A lot of people don't know this. Apple bought Siri and incorporated it in their phones.
Yeah, you're right. So if you don't want to create the technology, go buy it. Exactly. And here we have Gucci is partnered, and they did a digital garden exhibition for the 100th birthday, and they sold digital offerings, and which created scarcity. Scarcity creates price increases, and this is only available in the digital world. And these are a lot of the fashion brands jumped into this, a lot of them, for a reason. GB, I think you said last week, creating the digital universe and then do a physical product, right?
Absolutely, yes.
Because you can prove market demand in the digital universe, and it may not be as expensive.
And it's more controllable. If you have a digital event, you don't have to worry about COVID, you don't have to worry about cancellations, bad weather. A lot of these companies are using these platforms to have much more control in their own universe to reach a targeted audience and then engaging with them, possibly, in the physical world.
Great. Awesome. Stella Artois built a metaverse for horse racing. See, lots and lots of folks are getting into this. Now, these are the big brands. Smaller businesses can take advantage of it too. And you can open your own shop in the metaverse. So I'm going to move past metaverses because we covered much of that last week into cryptos. Lots and lots of cryptos out there. One of the first cryptos that everyone knows about is Bitcoin, but there was some crypto that existed prior to Bitcoin. There's a timeline here. I'm going to pass that slide. In 1983, this gentleman had a dissertation regarding digital cash, and he created DigiCash, and then it went from there to die. In 2008, Bitcoin came out, which is basically dots, digits, dashes. That's what it is. Well, we came off the gold standard under Nixon, long time ago. Okay. So the vast majority of money in our system is some sort of digital currency. It may not be a cryptocurrency. It's backed by the full faith and credit of the United States government. That's what it's backed by, which isn't huge debt, by the way. And then other cryptocurrencies came along. So Bitcoin started in 2005. You could buy 2 pieces for 10,000 Bitcoins in 2010. That was only 12 years ago. Now, it reached a height of $20,000 in 2017. It dropped 60% in 2020. It came down to 3,300. Imagine if you bought it at 20,000 and went down to 3,300. All right, it goes up and down. I mean, there's risks to this stuff, right?
Just like real estate.
Just like real estate. So here's the advantage of a cryptocurrency. I'm going to do this fast because I want to get to other parts of this presentation. You don't have a bank involved. You don't have a lender involved. You don't have a credit card company involved. Okay, that's a centralized version. With a distributed ledger, which is what crypto works off of, there's no middleman. Okay, you're transferring the crypto back and forth without worrying about going to a bank. There's credit card processing fees. Here's one way you can save money. Take crypto, not credit cards. You avoid the transaction fees. That's one easy way to do it. This explains Bitcoin mining. We went through it last week. The bottom line is crypto is generated through a mathematical algorithm, which has to be solved by computing power. And it becomes harder and harder to solve that algorithm. Thus, there's more and more computer power necessary to mine to solve the algorithm. So there's the server farms that try to solve that algorithm. And they consume huge amounts of power. And GB, you made a reference last week to the state of New York. I want to mention that briefly. Want to mention what's happening in New York?
Were they making them register?
Yeah.
So they did that 2 years ago, that they have to register to make it a security because they want to regulate it. And this is what I tell people, this will stick around in one fashion or another. I mean, another analogy to that is marijuana. Right now it's illegal on the federal level, but states are legalizing it and there's big money in it. So a lot of people have feared that this is wild, wild west. Yes, it is. But look, wild, wild west became California, where property prices are very high right now. So it's now what you do is how you do it. And if somebody is dabbling in it properly, the early adopters may benefit in the long run, because states are taking a lead beyond the federal government in adopting these technologies.
But on top of that, the New York Senate passed the US's first moratorium on cryptocurrency mining.
Yes.
Because of the amount of energy being consumed
Correct.
by these server farms.
Correct, yeah.
Right. It's becoming harder and harder to mine because there's going to be artificial scarcity associated with Bitcoins. There's a cap on the number of Bitcoins that can be generated. And I think that the projection is the last Bitcoin will be minted by 2140. And so the thought is, the harder it is to mine for it, the more value it will carry. Whether or not that's true is yet to be seen. But it requires more and more computing power to solve the algorithm. So you need crypto to get into the metaverse, to buy and sell NFTs. You might want to accept crypto to reduce transaction fees, faster payment. Credit cards take slower time, right? Broaden your customer base, because I think I saw a statistics, 1/3 of a certain population generation do not have traditional bank accounts. Have you heard that stat, GB?
I have, yes. Because they still keep money under the mattress, or for one legal reason or another, they don't want to be in the banking system.
Right, or they use Zelle or Venmo, or they don't go to a traditional bank, right?
Correct.
Or they're into crypto, okay? You can avoid fraudulent chargebacks. There's all sorts of reasons to get involved in it, but what you don't want to do is lose value. So my thought is, be conservative. Take the money, convert it to cash, convert it to dollars. Okay, I'm going to go a little bit further in to this presentation. So there's disadvantages, unregulated. Someone asked today, where's my protections? GB, where's the protections? There are not. It's unregulated. That's the purpose of it. There's no protections. Okay. It's very speculative. Criminals love it. Use it for ransomware because it's anonymous. You can't recover your password if you lose it. I can if I lose my password to my bank account. There's a couple of stories of people who have not been able to recover their password. Thus, they lost hundreds of millions of dollars. This is not the only instance on the top right. And then here's a fraudster in Germany who refuses to give her a password. So the German authorities can't get to the $60 million. Lots of scams, lots of fakes. You have to be careful. This Squid Game crypto scam, I think a lot of people know about that. Anyone can create a crypto. This is interesting. You can possibly raise money on a platform now, on a coin platform. Teplum is one of those coin platforms. It uses blockchain to do that. We're going to get into blockchain in a minute. So you might not be able to go to Angel or VC and convince them they're very competitive. I know this world. I'm involved in mergers and acquisitions. Trust me, it's extremely hard to get funding through a VC or Angel. GB knows this too. And you have to jump through a bunch of hoops, and it's expensive. You need to hire folks like GB and me and lawyers and all sorts of other people to get a transaction through. This avoids all that. Because right now, what I know is the SEC isn't involved in this. Is that what you heard, GB?
They are getting involved starting next year. So they are looking at platform because IRS is expected to give regulation of what is taxed and not. So they are, because right now cryptocurrency is deemed to be property. It is taxed a certain way. For SEC to get involved, cryptocurrency has to be securitized, hence the name Securities Exchange Commission. So if it's not a security, SEC has no jurisdiction on it.
Right. So right now, it doesn't exist. The SEC is not involved. It may be involved, like you said, next year, but you can raise money on one of these platforms.
Correct.
We talked about wallets. I don't want to go into this. The bottom line is you can have a hot wallet, cold wallet. Don't lose the password. Okay. Don't ever lose the password. Put a piece of paper in a lockbox at your bank. Bank still serve a purpose. Leave it there in case you ever lose your password. Okay. So I'm not going to go into how to create a wallet. NFTs are digital images which are sold on various platforms. You can have graphic artists create them for you, and millions and millions, $41 billion of NFTs were sold in 2021. That's the total value of the entire global fine art market. If you're not familiar with this, you should be. That's a lot of money, and it's only going to continue to grow. Why? Well, because it's going to hit 80 billion by 2025. And like I said, there are brands selling NFTs, just digital versions of fashion brands jumped into this. And there's the Fly Fish Club in New York. You have to buy an NFT to access the restaurant to get a reservation. Costs $8,500 last time I looked.
May I add something real quick?
Sure.
I think a lot of people still don't understand what exactly does it mean mining for cryptocurrency.
Oh,
They have
let's go
no
back to
clue.
that.
They have no clue. And what I have learned over time, mining is basically audit work. And I think this is why it makes sense to me.
Yeah, it makes sense to me too.
Yeah, because essentially somebody has created something of value and they're storing it on a server somewhere. And they're saying, because there is no central authority saying, yes, this is worth X, it is somebody's opinion. And what mining does is simply, essentially going into that data storage periodically and auditing and verifying that whatever of value is being stored there is still there. And over time, because people add data to it and they remove data from it, things can get lost. So basically, mining is going in there periodically and having multiple miners go in there and do the audit. Now, the challenge is when this crypto started many, many years ago, it was a smaller set of data. today the data set has
It's
exploded
huge.
exponentially.
Yeah.
So more people have to go in to do the audit work.
Validate
And
it.
this is why it requires more energy, because this computer stuff is just equations. I mean, your computer runs because it knows X, Y, Z, do this one after another. But as that grows, it requires more computing power to do the audit, and more computing power requires more electricity bill. So how do people make money? They create farms and farms of servers who have the computational power to keep on doing the audit work. And if you can do the audit work, and it's basic business, I'm going to do the audit work, I will charge you X to pay me in cryptocurrency. And if the cryptocurrency value is higher than your cost of servers, electricity, and the manpower to do all of this, you are running a profitable business. Mining is basically audit of somebody else's work. That's all it is. It just sounds cool because people have traditionally mined for gold or silver to make coins. That's the terminology they use. I hope that makes more sense to people. What exactly is mining? It's audit work of somebody's math problem using computer servers running on electricity.
That's a great explanation. Let's go to this graphic because it helps it add to that explanation. So Alice wants to buy a product from Bob, and she wants to use cryptocurrency to buy that product. When you have a wallet, you have a private key and a public key. The private key is like your PIN for your bank account. The public key could be your bank account number. Like when you get ACHs, you have to provide your bank account number and your routing number, okay? So she sends a message to the network, okay, to Bob's address, requesting a transaction. And this is where GB is, what I was talking about, this is where it comes in. A transaction is requested by us and bundled and referred to as a block. That's why it's called blockchain, okay? And this is the auditing part of it. The block is broadcast to all the mining nodes, and there's, I don't know, millions of mining nodes. Could be tens of millions for all I know. All these server farms that GB is talking about, all right? These nodes validate, which means audit, to be sure that the chain is verifiable, it's not fraudulent, et cetera. The first miner to validate a new block receives a portion of the Bitcoin as a reward. Now, when Bitcoin first came out, you could do this on a desktop. You could do it on a laptop. No way. No way. This requires dedicated servers that cost a lot of money, and many of them, okay? And the transaction is complete and the new block added to the blockchain. And then Bob receives his Bitcoin. So this is all happening in the background, okay? That's how it works. What's happening with Bitcoin, every 4 years, the number of Bitcoins, the number of blocks that can be generated are reduced by half. And 90% of the Bitcoins have already been mined because there's a hard cap on the number of Bitcoins. So it's going to become harder and harder and harder to mine for the coins. And that's deliberate to create scarcity, artificial scarcity.
And this is why we have multiple coins, just like we have multiple currency. We have the yuan, we have the rupee, the dollar, the Canadian dollar, the Singapore dollar, because imagine the whole world running on one currency. It's harder. So this is why we have multiple coins.
Yeah. And there's hundreds now of different types of coins.
Correct. And each currency is worth differently. Some currencies are stronger than the others. Right now, Bitcoin is the king, just like US dollar is the strongest currency in the world right now. That's why most financial transactions are handled in US dollar, because other currencies are not as strong, not as stable. They crash. I mean, we have had currency runs on Mexican peso and many other Asian currencies in the past. Currencies crash.
Yeah.
Remember the images from World War II? People hauling Deutschmark in wheelbarrows to buy a loaf of bread. Currencies crash. Bitcoin and other coins are no different.
We are not tied to the gold standard. So it's based upon the faith and credit that we have in the US government.
Exactly.
And it goes up and down.
Exactly.
That's the way it is. So here you have examples of some NFTs. We have these roadsters made only as NFTs, as digital images. They sell for one Ethereum. And when I prepared this, it was $1,168 for a digital image. Somebody paid $70 million for basically 5,000 images, a Singapore investor. And then you have, these are sold in various marketplaces. The most popular one is OpenSea. And anyone can create an NFT and sell it. And there's reasons to do it. But you have to be involved in crypto to do it. And crypto is based upon blockchain. That's why we're talking about them both. These are images called Bored Ape Yacht Club. They sell for millions of dollars. So the question I got earlier was, well, I can just copy and paste it and have my computer. Why do I need to buy the NFT? Want to answer that one, GB?
Absolutely. I can download an image or a song. I mean, Napster, we used to download free songs from Napster, but then somebody said, no, this is copyrighted. I will sue you. So can you download images, or can you even take a screenshot of an image from Google Images? Of course you can, but can you use it on your website? Nope, you're gonna be in trouble. So can you copy and paste an NFT? Yes, you can. But each NFT, if you want to buy and sell it, it has a non-fungible token, NFT. So somebody has said this NFT, this code is worth X. If you just copy and paste it, now you have a fake Gucci purse, which if you want to sell on eBay will get you less money than a real Gucci purse.
Thank you. Another example, take a Monet painting. I can go on the marketplace, buy a Monet painting, put it on my wall, and enjoy it with my family and friends. That painting gets stolen. It's happened at the Gardner Museum in Boston. Basically, priceless artworks were stolen a number of years ago, I think 20 some odd years ago. They've never been found. They're gone forever. Maybe they're in someone's personal collection somewhere. When you have an NFT, that doesn't happen. You own an NFT.
Correct.
Okay. It's there so long as you have access to a computer.
And can a half decent painter copy a Monet? Of course they can. Will it sell for the same price? Heck no. It's not a Monet. It's not painted by Monet. It's painted by a copier.
Right. Exactly. Yeah, you can do that. Sure. Get a print, put it on your wall. You have a Monet.
Yeah.
But you don't have a certificate of authenticity.
Exactly. This is nothing new. That the whole idea is just a different mechanism. This stuff, we're used to it. Watching a movie on CBS versus watching the same movie on Netflix. It's the same darn movie, but totally different experience. You can control on Hulu if you want to see ads or not. If you're watching it for free on CBS, you're gonna watch the ads.
Exactly. So why would someone do NFTs? First of all, if you're a graphic artist, you can make a lot of money creating NFTs.
Yeah.
Okay. We talked about it. You can link physical products to NFT. In other words, create something in the digital world, right? People like it, then recreate it in the real world. Okay. Or people holding the NFT can now go ahead and spend more to acquire the physical item. It builds trust. It can prove authenticity because it's really, really difficult to break the blockchain. Really hard. It's cradle to grave tracking of a product. And this is what GB was talking about, a digital certificate of authenticity. That's what counts. Okay. So manufacturing history can be tracked to the blockchain.
And people sometimes ask me, why do they want this stuff? It's because you cannot hang your physical Monet in a metaverse. If you want a Monet equivalent, it's just collecting art. Some people collected Beanie Babies. I mean, they were worthless, but for some people, they were worth a lot of money. So because you cannot hang a real Monet in a metaverse, people who are interacting over there, they want to show off their stuff. Yeah. They buy NFTs to display in their metaverse.
They're living in the metaverse.
Yeah.
They're spending 8, 10, 12, 14, 16 hours a day in the metaverse. That's their life.
And some people say it's right or wrong, but hey, some people watch 4 hours of TV every day.
Exactly.
I watch an hour a week. Does that make me better? No, I just have time. I have I'd rather ride my Harley than watch TV. It's
Yeah.
just my choice. Some
Right.
people want to spend 12 hours gaming, and some people make a lot of money gaming. That's their calling in life. I don't judge.
Well, if you're watching TV, it's not interactive.
Correct.
It's called the boob tube for a reason, right? But when you're in a metaverse, then you're interacting with your friends and the people around you, and you're engaged in activities. So it's engaging your brain. Okay. So I realize the pros and cons of both.
And say what you may, there's a reason why the SEC wants to get involved. There's a reason why the IRS is getting involved, because this is real money, call it fake or not. And this is the point of this presentation, right, Mike? We're not here selling NFTs. We're not here selling crypto.
No.
We're telling you that there is money to be made. Should you choose to make money, there are economic and tax consequences. And before we can talk about, I mean, I did a presentation on this stuff from a tax point of view, but if you don't understand what this stuff is, how can you monetize? It's just a lost
opportunity. It's a lost opportunity.
Exactly.
So take a look at this on the right-hand side of the screen. Teller Finance announces mainnet launch with Fortune Teller NFT sale. All right. So it'll grant early adopters to access unsecured loans on their platform without the need for a US bank account. That's awesome. How often does that happen? An unsecured loan. GB, it hardly ever happens.
Exactly.
Okay. Let's continue on. So lots of ways to use NFTs, allow access to digital service, manage a supply chain, big one, product history. Let's talk about a lawsuit. You're selling a product. Let's say it's a bike, and the bike fails, the chain fails, and now you're sued because you're a bike dealer. Okay, you're a bike retailer. Well, who are they going to sue? They're going to sue everybody, right? And you need the ability to trace back that chain to where it was made, when it was made, how it was made, etc. Blockchain NFT allows you to do that. And then you can possibly point the blame back to the manufacturer. It's cradle to grave tracking. Okay? You can raise funds. You can build a solid base of loyal customers because they're out there buying and selling NFTs. Okay? You can give them a reward to arrive at your shop every time they show an NFT. Build a loyalty program. Give them loyalty points when they buy NFTs. Help a charity by creating one. I mean, just be creative. Tell your story. Okay? Now, going on from there. So how do you create an NFT? If you're great at art, do it. Or hire someone to do it. I mean, that's what we do. We hire people to do work for ourselves. All right? And
may I add something real
go
quick,
ahead.
Mike?
Sure.
I think a lot of people pass judgment on crypto and on NFTs based on what they hear in the media. The media will always promote the most egregious and most outrageous example. So yes, there are people who are selling, for example, I think it was I forget his name, the founder of Twitter. He sold his first tweet for a couple of millions of dollars. That's all a gimmick. It's all a gimmick. There are people making money on this stuff and they're not gimmicky. Almost every industry, almost every profession has their gimmicks, but there are people making real money doing this stuff. So don't judge this stuff based upon the crazy news articles you hear, because they are just trying to get your attention, whether it's CNN or Fox News. They just want your attention, but there's real money to be made here in the background. People who are not gimmicky. Yeah.
And here you have some examples. You can make money infinitely from your art through NFT royalties, infinitely, and raise funds for causes. That's great. Okay. It can protect your enterprise from cash losses through avenues such as counterfeit coupons. That's a big deal. Coupons can be easily counterfeited. With an NFT, they can't be, because they have that certificate of authenticity. Okay. Be creative, right? Decide what you want, create your goal. It always starts with a goal. Create an NFT loyalty card or a promotional code for your customers. And perhaps you might give someone an exclusive right to a club or a premium service or consulting hour or or some other award for buying the NFT. Choose your blockchain. There's lots of blockchains to choose from. The most popular one, the one that most people would choose, is Ethereum. And the marketplace like OpenSea, you're basically buying and selling using the Ethereum coin. So create the art. If you can make it, hire a freelancer.
That's
And
a
this
great
is-
point. A lot of people think they have to do this all on their own. Teamwork. Businesses are built on teams. You can hire somebody who you can learn this skill set, and you can have somebody with the technical skill set, and you can together make money. So don't try to figure it all out on your own, is my suggestion.
Yeah. Owners do deals, workers do tasks. That's what I say. So if you are involved in day-to-day tasks, then you're not working on your business, you're working in your business. Hire and engage the appropriate people to do the tasks. That's what I think you should be doing.
I thought you said do the tax.
That too. Do the tasks, not the taxes. Okay.
Tax
No.
is a task.
Yeah, tax is a huge task. All right, let's go to blockchain, because this all relies on blockchain. If we didn't have the internet, we wouldn't be talking like this, right? I worked for a defense contractor called Boat Beranek and Newman way back in the day, doesn't matter when, before the internet came up, because Boat Beranek and Newman was building computers and putting them into army bases and military bases. And the network was called ARPANET back then, and still exists, because the military knew way back when that if a air base is attacked and the computers are taken out, we have a distributed network over here, which has all the information anyway, okay? I was bidding out millions of dollars of contracts to the federal government and negotiating with generals over these contracts because it's so important. And I was part of the team that did that. What you have here with the internet, and the ARPANET became the precursor to the internet, and Boat Beranek and Newman, the gentleman there, created the @ used in email. I know him. This is a distributed network. Now, this gets a little bit geeky and it's all confusing, and guys like GB and I get into this type of stuff. But in the end, they're blocks that are created when a request goes for a crypto transaction, okay? And then there are sub blocks and stuff. This is all computer technology, computer blocks, okay? And they're handled through a peer-to-peer network, a distributed ledger. It's easier to understand this if you look at this graphic. So you have a central authority, let's say it's a bank, and the bank is controlling all the bank accounts for its customers. That's a centralized system, and that's fine, it works, and it's all good until the savings and loan crisis occurred, okay? Or something else happens. A distributed ledger is not subject to being taken down when the central authority is taken down. Was it 10 years ago, 12 years ago? Our entire economy almost crashed because of
2008. Yeah.
2008. It almost crashed. It was only saved by the US government. A distributed system would have avoided that. And that's what this is. You have a bunch of computers basically talking to each other. That's what a distributed ledger is. And the distributed ledger will do verification of the blockchain, as GB described, to ensure that the transaction is valid. And this is what a blockchain might look like. I know it's geeky. It looks like a chemical tree. I get that, okay? And it gets longer and longer and longer and longer, as GB explained, as it becomes more complex.
And that's what scares a lot of people, I think. It took the US government almost $1 trillion and picking winners and losers on who will survive that crash and who will not, right? I mean, Lehman Brothers was allowed to fail because that's what the central bank, the Federal Reserve, decided. Hey, Lehman Brothers, you're too toxic to be saved. You're going to go under. In this system, the idea is the marketplace decides who will win and who will lose, because the 2008 crash stigmatized and scared a lot of people that it could all just come crashing down in a heartbeat. This,
we
in
were very
theory, in fact,
close.
yeah, very close. Bank of America was almost nationalized. Imagine
Right.
that. So
It's the largest bank in the nation.
exactly.
So here, you have an example. Sorry, let me go back one. Oh, smart tags are forms of blockchain. QR codes, RFID tags. I've been involved in that. I'm sure GB, you've seen it. Where inventory is tagged and it's scanned. It's the easy way to keep track of it. Right? Our signatures on ceramic or metal devices. It's all part of preventing fraud and counterfeit goods, which is what blockchain is excellent at. You can track everything. Auditors love this, right, GB? You can track everything from cradle to grave.
It allows Big Brother to watch everything. That's the funny thing about all this stuff. It's so decentralized, but yet at the same time, everything is tracked. And it's just like, we all have camera phones now. People can document good and bad in the world. 20 years ago, people could just fly under the radar. So there is good and bad to this. The good is everything is tracked. The bad is everything is tracked.
So at any point in the supply chain, everything's tracked.
Yeah.
At any point in the supply chain, a partner can trace that product back all the way through to see where and when the product was originated, to what plant, possibly to the person who actually created it or whoever ran the machine, possibly. It might get that detailed. All right. So
accountability, right, Mike? It's all about that's the good of it. It leads to accountability. You can't hide and shirk your responsibility.
No. You can use blockchain for keeping your IP safe. All right. So the question about copyright for those NFTs. Well, you have a digital certificate of authenticity. And you can actually copyright it. That's fine. Smart contracts basically allow for contractual transactions to happen faster, easier, and more efficiently through the blockchain. This gets really geeky. Let me put it this way. GB, you've been involved in sales of businesses. How messy is an M&A transaction?
Extremely. Full of subjective opinions.
Right. In the contracts. Numerous contracts with multiple revisions.
Correct.
They go, or the purchase of a property. Or multiple revisions going back and forth. Smart contracts make it easier because they basically are triggered when predetermined conditions are met. So they're used to automate the execution of agreement. Smart contracts is becoming a bigger and bigger deal in this world. And it's going to save time, money, effort, energy, and expense. And then it's something called decentralized finance, Defy apps. So Defy apps basically use cryptocurrency to allow people, for example, to loan coins, crypto coins, to others. That's now permitted. Okay, that's what this is about. And DeFi projects have already captured billions of US dollars of value, billions, and it's only going to continue to grow. So users can participate in this new generation of financial services without the need for centralized custody of fees from banks. That's the point. So let me go from there. You probably can't see this, but this comes from one-on-one blockchains. They have use cases: digital identity, financial security, trade finance, cross-border payments. There's fees associated with cross-border payments. If you use US currency or any other currency, those fees are eliminated with cryptocurrency. At some point, will this be regulated? Probably, maybe, I don't know. Financial service, financial data recording. There you go. There's where the accountants come in. Improves data recording accuracy, saves reporting and auditing costs. Right? Government, supply chain management, insurance, automates claims for insurance. Resolves disputes faster. Escrow, huge. Mortgages, clinical trials, and trading activity. So this is the DeFi platforms, and there's a couple of them. There's Aave and Compound, and there's a whole bunch of them. You can look them up. But they use smart contracts to automate the lending, and you can now actually raise money as equity through one of these platforms. And this explains how a DeFi loan will work. I'm going through this quickly because we're coming to the end. But the bottom line is educate yourself. If you want to get money for yourself and you don't have collateral and you don't have a good credit score and the conditions of the industry and your own conditions aren't good, et cetera, right? You can't get it from friends and family. You're not interested in crowdfunding. You might consider going to one of these platforms and taking a crypto loan or raising money through a crypto platform. And again, SEC is not involved yet. So this is a graphic for crypto loans. Here you have a borrower, similar to a bank, right? But it's going to a platform, not to a bank. So the borrower is taking the loan through the platform, okay? And somebody's depositing that money into the platform to be lent. And then the borrower repays the loan, not with dollars, that's what fiat means, whatever the denomination is for the currency used in that country. It's being paid back by crypto. Okay. Sometimes the collateral requirements often exceed 100% of the loan amount, but you avoid identity checks, you avoid credit checks, no bank formalities, etc. And the rates, I checked this, a week ago, 3.78% and 4.34%. What's EIDL is 3.75%. It's a good rate. And here's some of the DeFi platforms: Uniswap, MakerDAO, Radium, okay, Aave. And now this is interesting. Aave has introduced credit delegation. So the service allows someone with a lot of collateral deposited on Aave and no desire to borrow against it to delegate their credit line to a third party they trust, therefore co-signing a loan to a trusted third party. And the delegator gets a cut of the interest. That's an interesting way of doing business. And it's aimed at institutional level use cases and sophisticated price conscious trading outfits that need options for fast and easy credit. So this is how credit delegation works. Again, you have somebody who deposits $1 million, they get crypto, and they basically make that available as a credit line to someone who wants to borrow from them. So you're not borrowing from the bank, you're borrowing from the individual who deposits it into the platform. And that concludes it. GB, anything to add?
No, I think you did a good job. It's a very complex topic. It's a topic subject to a lot of bias, but I think you covered it well, that A, you don't have to use it. B, if you use it, there are many, many opportunities. And it's a good mechanism to start exploring now before it gets even more complicated. And it will get more complicated, just like anything else in life. So the early adopters do take on their risk, but also have the capacity and the opportunity to reap the rewards.
Right. Just
good
be
job.
creative. Thank you. Do we have a question? How can you get a recording? You can write to Lauren and she will go ahead and make it available. I think at some point these recordings will be on some sort of platform. And maybe someday we'll meet you in the metaverse where we can do these presentations.
I can make myself look really pretty in my avatar, right?
Create an
I get to
avatar?
control. Yeah.
Right. Go to a
Yeah.
conference room, look up Chalo, look at Wilo. I mean, this stuff is happening now. Okay.
Yeah.
All right. Thank you everybody for your time today. Next week, we'll cover some other topic that GB will
Yes.
come up with, I suspect.
Perfect. Perfect. I'll do that.
All right.
Take care.
Thanks so much.
Thank you, Lauren.
Bye, everybody.
Bye, Mike.
Oh, we're the best. Awesome.